Hey, chip stock investors. In recent weeks, we have done a short on Marvell Technology Group. Last week, we did a short on what we think is some big news, internet infrastructure upgrades underway for Comcast and Charter. In light of those two things, we thought it's about time we do an actual deeper dive into Marvell Technology Group, ticker symbol MRVL. So I'm going to talk a little bit of history with the stock. This is actually one that we've been invested in here for a number of years here at Chip Stock Investor. So a little bit of history, where the business is at right now, and catalysts for Marvell's growth in the coming years. So I guess let's maybe start with just a little bit of history here. So going back a few years, back in 2015, Marvell got into a little bit of trouble with the Securities and Exchange Commission for some accounting practices where they were trying to pull forward future sales to try to smooth over what was at the time a cyclical slump in their business. Current CEO Matt Murphy took over in 2016, and I believe he very quickly got to work putting his fingerprints on this business and changing things. My history with the stock comes in 2017 when Marvell announced an acquisition of a company called Cavium, a company that developed controllers for memory chips. Marvell made that acquisition to shore up their own business on this front. That's kind of where I started getting interested, started making some small purchases here and there, mainly to just kind of keep the business on my radar. And the position in recent years has started to grow into a more significant part of my portfolio, which brings us to where the business is at, I think, the last couple of years. Marvell went on the merger and acquisition hunt pretty aggressively in 2021. They actually acquired two businesses that significantly increased Marvell's amount of semiconductor industry market that they could address with their designs. The first announced acquisition was Innovium, a company that makes data center switches. We'll talk about what that is here in a moment. And the second was Inphi. And Inphi develops various chips and controllers for networking components, for example, optics. And these can be used all over the place. It could be in a data center or a more traditional networking system. So Marvell made those two purchases last year. Now, I think this is very significant here, and this story might start to sound a little bit familiar to you if you take a look at Marvell's latest quarter revenue breakdown. Notice here, the second line from the bottom, consumer markets. At this point, a very small portion of the business overall, less than 20%. That was very different a few years ago, where Marvell made a lot of parts, a lot of components for the consumer market, things like PC and other related consumer devices. Via multiple acquisitions and just some organic development, that's completely changed. Now, this is very much an enterprise business focused on data centers, enterprise. So basically, data center is networking that's data apps housed in a remote data center, accessed via an internet connection. Enterprise would be everything else. Maybe it's on-premises data and applications. Also mobile carriers, 5G networks. Marvell has a healthy 5G business, which before that signal gets to our smartphone and our smartphone interacts with that wireless signal, there's a whole wired network behind the scenes that mobile carriers need to build out and maintain. And then automotive and industrial, which is a bit newer of a business. They have a new subsidiary that they started up last year called Brightlane that handles the automotive segment. Now that could be problematic for 2023 if the auto market takes a nosedive, but for now, still growing as well. But you can see here via acquisition and development, Marvell has completely changed its focus from consumer markets to enterprise markets, which are a much more consistent growth business. This was part of the rationale for AMD when they acquired Xilinx early in 2022. Nvidia has also been taking a much more organic approach, slowly getting itself into the data center world and away from its traditional video game graphics market. A lot of other companies doing something similar here, again, because of the more consistent growth and the more diversified approach that a company can take when addressing these bigger enterprise markets. Another slide that we've created here just to further explain what exactly Marvell designs. Historically, this business designs control of a memory chip, as well as a type of chip called a DPU, data processing unit. That also might sound familiar. A couple of years ago, Nvidia announced they were getting into the DPU market with their Bluefield line of chips. A DPU is a type of system on chip that combines basically a CPU, a central processing unit, similar type of chip that you'll find in your PC or your laptop, with some sort of networking controller, perhaps also some sort of computing accelerator. Think of all of the different lines that data travels through in a data center, in a network. It might be an internet service provider's network or a mobile operator's network. You can think of it like a freeway system. And these chips that Marvell creates are almost like the interchanges on a freeway. It helps figure out where to route the traffic as it comes through, helps optimize the traffic. Also, some of these chips used for security to help make sure that the right traffic is getting through and stuff that isn't supposed to is not. So a lot of uses here that also extend beyond what we might think of as traditional networking, also extends into the modern vehicle. So all the information that a modern vehicle takes in via all of those sensors, maybe it's an advanced driver assist system, that data needs to be processed, it needs to be moved to the central processing unit. Also, industrial Internet of Things, so a lot of robotics, perhaps maybe in a factory, data being taken in by the sensors of the robots building something, travels through the network, gets processed. Think of Marvell as the freeway system, the transportation system, if you will, of a network. So you see the really strong growth the last 2 years here in 2022 and fiscal 2023. A lot of that driven both by the pandemic boom, but also those acquisitions. Analysts expect Marvell's growth to fall to a low single-digit percentage in fiscal 2024. That's the fiscal year that will start at the end of this month, end of January 2023, before the company returns to a high teens, low 20% growth rate. Now, those are numbers that Marvell, Nat Murphy, and the top team have provided themselves via investor presentations. So strong long-term growth. And in addition to that, this is the other thing we like to look for in a quality growth business. In addition to actual revenue growth, also expanding profit margins. So you see here net income last year starting in the high 20% range, increasing into the low 30% range and beyond, mid 30% here expected in the next 3 to 5 years. And on a free cash flow basis, again, kind of depressed free cash flow margins the last couple of years because of those big takeovers of Innovium and Inphi, but improving to a mid 20% free cash flow profit margin here and expected to hit 30% or better in the next 3 to 5 years. And one more look here at the ticker terminal, just to explain what I see the biggest risk is here for Marvell. Those acquisitions were not cheap, even though they did pay for them, mostly in the issuance of new stock. You can see short on cash and equivalents here on the balance sheet. It has started to improve here in the last year, $723 million in cash and short-term investments, short-term equivalents, but scrolling down here to long-term debt, $3.9 billion at the end of the last quarter. Marvell has paid down debt, you can see from the end of the last fiscal year, about $500 million worth, but substantial amount of debt, a little bit thinner on cash than I would like to see, but such is the cost for completely revamping a business model like Marvell has done under CEO Matt Murphy the last couple of years. A quick note here on valuation. Here at the very start of 2023, Marvell trading for about 29 times trailing 12-month free cash flow. Price to earnings ratio doesn't work at the moment on a trailing 12-month basis. Earnings per share on an unadjusted basis are negative. That recently just flipped here in recent quarters. And I think the two metrics will converge over the course of the next few years. And once again is due to those acquisitions, as the cost of acquiring Inphi and Innovium is amortized over a few years period. Just using a quick discounted cash flow methodology here, I'm using $1.26 free cash flow per share generated over the last 12 months. How do we get to the market pricing Marvell at 29, 30 times free cash flow, or about $37 to $40 a share as of this recording right now? To get to that, reverse engineered it. I think the market is expecting about 20% earnings growth over the next 5 years before leveling off to about a mid-single-digit earnings growth rate thereafter. Using an 11% discount rate, that gets you to, depending on your inputs, somewhere in the high $30 to low $40 per share range. Is 20% growth over the next 5 years doable? Well, based on what Marvell has showed, that high teens revenue growth rate, improving profit margins, and as those profit margins improve, perhaps the company will start repurchasing stock to further boost earnings growth. I think it's possible. And then 5% growth thereafter. Again, this is enterprise computing. I think that's slightly conservative. I think this company could actually be a double-digit earnings growth business through the end of this decade. Going on the more conservative side, I think Marvell is a fair value right at this moment, if not a little bit on the cheap side after getting clobbered by the bear market in 2022. Given the present situation, it may not sound like Marvell is a great buy right now, but this actually remains on my personal list as a dollar cost averaging candidate, a stock that I'll add to on a monthly or quarterly basis in calendar year 2023. In all, I think this is a really solid business, one of those chip stocks that I think often gets overlooked because it's on the enterprise side. A lot of investors focus on the really flashy logic chips like your Nvidias, your AMDs, Intel, the manufacturing companies that make those really advanced logic chips. A lot of these chip companies, Marvell included, have really nice niche portfolios of silicon that they develop, really high profit margins, and maybe not the biggest growth rates out there, but nonetheless really good double-digit growth rates, solid profit margins. I think Marvell is a stock worth giving some more attention right now. I hope you found this video helpful as you do some digging on Marvell Technology Group. Really appreciate your support. Appreciate the time you spend here on the Chip Stock Investor channel. Make sure you hit the subscribe button. Later this week, we have Air Test Systems reporting quarterly earnings. Also Skyworks Solutions making an automotive investor presentation. That should be interesting. A lot of things going on over at Skyworks, a company we have not done a deeper dive on yet here on this channel. So hit the subscribe button.